Hey everyone, and welcome back to the Your Money Your Life podcast, episode 185 of the podcast. We have been going at it for a while now. Before we get into the podcast, make sure you like, subscribe, 5-star rate, and review wherever you are listening to the podcast. If you're watching on YouTube, make sure you hit the notification link and subscribe as well, because we do this every single week. And we are going to get right into it this week. And first, of course, you know that we always start with our update of the week, meaning our market update of the week. So let's jump right into the numbers on the market. So I've been calling for some sort of pullback for a bit, and I was early on the call, and now it's here. Last week of the market has been a little bit of a pullback, a little bit of a correction, as to opposed to what we've been seeing year to date. We had that a little bit in early March, and then we kind of had a bull run since then. And now we're having a little bit of a correction here again. Last week down 2%, last month a little bit over 2% down. Not a big deal in my estimation. I think we still have a little bit more of that to go, especially throughout August and summer, when it's historically quiet times if people are on vacation, different things. And then we'll get into quarter three or get into quarter four, and obviously are in quarter three. And we'll get into a little bit of that. But I still think we finished the year green for the market. And I think that's just because we're due for a little bit of a green run, just based on what we've seen in 2022. 2022 being the tough period of the market. Now we're having a little bit of resurgence here. But the big news of this week when it came to stocks was just more of the Fed's speak. So the Fed released minutes say that they still see inflation as something that is going to be sticking. And they still have a ways to go on inflation, meaning they'll have to keep raising rates a little bit more and a little bit more, and potentially keep them higher for longer to combat inflation and to slow things down just a little bit. We have initial jobless claims numbers as well. New claims total 239,000 for the week ended August 12th, down 11,000 from the previous period, and just under the Dow Jones estimate of 240,000. Continuing claims, which run a week behind, rose to 1.716 million. So we're seeing numbers from a little bit of retailers too. Walmart post strong numbers, and I think a lot of that is due to the fact that people are changing their consumerist habits. And Walmart's a good place when things are tight for people to go and purchase things. So they had strong numbers as well, and some other companies released earnings. So that's the front of things on the market. Again, still volatile in the near term, which I think is a lot of patience going to be involved in the current market right now. Patience, loading up on different things that are, diversified and risk averse, as we probably see a little bit more of the growth pullback for now. And then, as that wades out, there'll be opportunities for people to pick at during those times. So that's the big thing for the market right now. If we look at news and what's going on, updates as far as news, mortgage rates are the highest, to rise to 7.16%. So a 30-year mortgage rose to 7.16% on the average. Last week is matching the highest level since 2001. And this is according to MBA, or Mortgage Bankers Association. And guess what? Mortgage applications slid from the prior week, and applications to refinance a home dropped 1.9% for the fourth straight decline. This is because of higher borrowing costs, of course. So we're seeing these mortgage rates that are going to affect the demand for new loans, for mortgages, for home loans. And again, the real estate cycle is a little bit different than other cycles. It's a longer cycle, right? If you think about a house and people when it's an emotional purchase, and it's also an emotion. It's not really an investment. It's, even though it's a lot of people's biggest net worth item, it's more of a purchase for where you live, a purchase for your family to grow up, and it's not an investment, as some people, we'll talk about the real estate gurus later and how they look at things. But so when someone is in a tough time and they have a home, they will sell off everything before they sell out their home, right? They'll sell off stocks, 401k, any of that stuff before they give up a home. And so that's why the cycle is so much longer when it comes to the price inflation in real estate and different things of that nature. So we'll be watching that closely and what's going on in that market. And we'll talk a little bit more about, real estate. Cause I think, this is an aside, I think people, and you see it online on social media, people that like love the real estate game, which again, I'm not I think there's some opportunities that make sense. And however people get funds, they get funds, but it's a heavy leverage game, which people don't fully understand. Like, just borrowing other people's money or because you're paying 2 million in notes, um and just levering up on a bunch of bank loans to buy real estate doesn't make you a guru or make you know what you're talking about, because it's a very dangerous game. One, it's when things go the other way, people think that prices just always go up in real estate or anything. It's not the truth. When things go the other way, you're in a world of hurt. And also, people don't tell you, these real estate gurus, they're not, a lot of them aren't really cash flowing as much as they say or they have you believe, right? For the most part, if you're bringing in, 15K a month from real estate or whatever it is, um, they don't tell you that they're paying the loans, that they're fixing the maintenance, they're doing all this other stuff. If they're getting a management company, they're giving them a good percentage. A lot of them are barely cash flowing. You can only cash flow well enough to sustain yourself if you're on a big scale, and sustain yourself is relative to your cost of living and all that stuff. But it takes a big scale to really do it right. And a lot of the people aren't really doing it on that huge of a scale. So we're going to be honest. You can cash flow a lot easier with something that's low fixed cost and that you can really drive and help and service people and cash flow way a lot more. So interesting perspective, because I see people see it a lot and they might be tricked or fooled on like the numbers and what's actually really going on. But if you actually crunch the numbers, which and I'm easily able to crunch numbers, and people are saying these things on social media or in person, not the truth, not the truth at all. So back to more news. Borrowers are flush but still behind. So what does that mean? Consumers have more cash than they did pre-pandemic, right? But they're falling behind on loan repayments faster. I think people are realizing, hey, income isn't just coming in like before. Government isn't giving out these tax deductions, different things. I do have cash that I've been holding on to, but now we have different things coming up for people: student loan payments, consumer payments, consumer debt payments, inflation still whipping behinds with shelter and food continuing to climb up. And so while bank balances are at the highest, 30% higher than pre-pandemic, according to some estimates, Americans are becoming late with some credit card and other payments, and it has surpassed the level seen in 2019. This is by the Federal Reserve Bank of New York. Yet financial distress levels are still low. The conundrum has analysts asking if delinquencies are likely to translate into foreclosures and bankruptcies anytime soon. So people are pretty much wondering, hey, people have cash or somewhat decent amount of cash, but people are paying debts off less and are slower, and repayments are being late and delayed. Credit card balances are the highest levels that we've seen ever. So what's going to happen? It's either things going to tip one way or the other. Things get better, cash is used to pay down these debts, and income continues to increase, real wage increases, or inflation continues to catch up to people, and everybody falls back behind or whatnot. So those are pretty much the one or two ways things can go going forward. So we'll keep an eye on that. And we talked about this a little bit, but the Fed's meeting minutes came out, and they maintain a hawkish stance. Hawkish meaning when they're hawkish, it pretty much means they're looking to continue to fight inflation, have a more controlling policy in what is going on when it comes to inflation. So they share concerns, the Federal Reserve. They shared concerns that inflation was still persistent and it could require further interest rate increases. And this is from the Fed meeting minutes that came out yesterday. The Fed ultimately decided to raise the target for its key rates by 25 basis points between 5.25 and 5.5, the highest level in 22 years. And the meetings show that some participants expressed concern about inadvertent over tightening of policies. So some concern about inadvertent over tightening policy, meaning a small number of the Fed Reserve members were concerned that maybe we're going too far with the rate increases, with taking out liquidity out of the economy. Are we going too far, or are we doing it at the right pace? But most think they still need to fight inflation, because it's still a persistent thing. But we'll see. It's really going to be interesting to see what happens as far as a soft landing or not. Soft landing or not, meaning, can the Federal Reserve use their policies to slow inflation down, but not so much that it drives us into recession. We talked about that concept so much. And it's the big, big thing that we're all waiting for and wondering if that could happen. So we keep talking about this Ozempic drug, and I'm just curious. I'm really, interested and fascinated by what's going on with these weight loss drugs that are actually supposed to be, of course, fighting diabetes and different things, but a lot of people are using it for weight loss, especially, whether it's celebrities or really, really wealthy people, because it's expensive, expensive drug. But these new drugs that are treating obesity, there's three of them that are pretty prevalent on the market: Ozempic, Wegovy, and Mounjaro. They're more could be coming to the market. There's like a naturally made one as well. But it's really interesting to see the effects. I'm reading more about the effects of these drugs, and how they have incredible harmful, in a lot of cases, harmful side effects. But a lot of people are taking it and seeing crazy ability to lose weight. There's a lot of celebrities, wealthy people taking these drugs. But the side effects, for you medical experts out there, I'd love to hear more about what you're seeing in the side effects. I've read some of the stuff, pretty scary stuff. But a lot of people are taking it. And what did that do for the medical market? This is a cash printing cow for medical companies. Like, this is a cash printing cow. If you tell people, we always talk about the diet pill, that people would rather take that than work out and work hard. But if you actually tell people there is a magic pill that works, imagine how many people are going to continue to take this, no matter what the side effects are, because people would always love to take the quick route. But trust me, folks, there's no quick pill, or unfortunately, no quick course that you can pay for to understand business in the sense of like how to run a successful business, right? That comes from experience. You can get stuff to teach you and advisors. I 100% believe in that, and outsource things of stuff you don't know. But telling someone to like just create something for you, there's no one that can do that, right? So this is interesting. Something to keep watching. I don't know if you folks are out there have heard of this, what you're seeing about it, what are the side effects that you're seeing. If you've taken it, maybe you've taken it. I'd love to hear your thoughts on that. And we talked about Walmart earlier. Walmart, record sales, strong sales. Again, people are changing consumer habits at this point. And of course, Walmart be more of a discount retailer, especially in their expanding their grocery offerings. See, as he says, grocery sales are particularly strong. People are going to go and look for ways to lower the price they're paying for items, because food, shelter, prices still inflated across all consumer markets, primarily almost. So Walmart had a strong showing, as we saw. So that's pretty interesting news to keep on your mind. Something also interesting: New York City bans TikTok on government devices. We've talked about the bans. I think it was Montana or Wyoming, one of those states that banned it altogether, I think. And now New York City, a lot of state governments, I think the federal government already did it as well, have banned TikTok on their devices. Now we see New York City saying we will no longer use it. Their concern generally stems from TikTok's ownership by China-based tech company ByteDance. Congress also voted to ban TikTok on federal devices last year. Yep, as we said, federal devices, and several states have taken similar steps, and now New York City is doing that, pointing to security concerns that have made the app a target of bipartisan scrutiny across the country. So they just did this. It's just pretty interesting now that you're seeing a lot of people come with the ban. Does that slow TikTok's growth? I don't know. They're pretty much, almost maxed out their total addressable market with getting 2-3 billion people on the app in less than four years. So we'll keep watching on if it's still more bans that come across, because there could be. There could be. We'll keep watching. Now, let's see. We folks have one last thing today, which is, of course, we didn't do a case study. We've done a couple case studies the last few weeks. Let me know what you think. Who would you like to hear? What you want more of? But this week, we're going with the question of the week, a couple of questions a week that I found were interesting. So let's fire them off rapid fire. Do consumers spend more money on Venmo or spend more money on Amazon? So do consumers spend more money on Venmo or spend more money on Amazon? That's the easy one to me. It's got to be more money on Amazon. I think it's so easy. I used to be like not an big Amazon user. Like I was like, I want to see, feel, touch what I'm buying. But no, I've been on it recently. I'm like, this is so much easier. It just comes to my doorstep. I don't have to go all the time. I don't have to do much. It's got to be Amazon. I think they said the average someone spends on Amazon is like $193 per month. Oh wow, I'm wrong. So send more on Venmo. So okay, they take the actual. Well, that's really interesting. They take the actual. So the answer is send more money on Venmo. And it's at 304,000 sent every minute on Venmo versus 283,000 spent every minute on Amazon, which that's surprising to me. But it makes sense if it doesn't make sense. I don't even know if that makes sense to me, but it is the truth according to where they got it. So they're actually showing in more detail. I'm trying to get a better look at where people are spending their money here. 1 minute every day. Let's zoom in, see if we can get some more numbers. Zoom isn't working there. Click to view larger image. Let's see it. So here's a data on 1 minute, every minute of the day, what happens as far as like big tech and different companies. So and when was this done? I actually want to see. But they're showing this is a 2021 graphic. Actually, will let you guys see it. It's quite interesting. A 2021 graphic that shows every minute of the day what's happened. 44 million Facebook views, users share 240,000 photos, Instagram users share 65,000 photos. Every minute of the day, there's 575 tweets, 575,000 tweets. Users watch 167 million videos. Google, there's 5.7 million searches conducted. So every minute, there's so much going on. This transaction, there's a lot of things. So that's a cool graphic to see what's going on. I was surprised on the Venmo versus Amazon one. That is quite interesting to me. That payment structure there. So interesting one. We just got fooled. I lost that one. But let's go to the next one. How many payment transactions does a consumer make in a typical month? How many payment transactions does a consumer make into? Oh, that's going to be a lot. I'm going to go with how many payment transactions? I'm going to go with over 50. I'm going to 50 or over, and we'll see where I'm at. Okay, yeah, 68 transactions on average. In 2018, it seemed to be the highest. They took like last 5 years. They started at 2020, but so 68.4 in 2020. 2018, it was a 72.1. I wonder what was going on then. But yes, it's 50 or higher, and I was close. I'm going to give myself that one. Close enough, folks. Close enough. Well, we've done not just close enough. We did a really good job with this week. Make sure you tap in, tell your family, friends, share with your network. 4-year anniversary of New Street is coming up, and we've been able to get to over 450 households and tens of millions of dollars that we are stewarding for retirement for a lot of client households. So make sure you tap in with us every week. We'll talk to you soon.